good, day traders, and welcome to the premium newsletter for May 29th, 2013. There's a lot to discuss today, so let's get right into it. The only substantial announcement we had this morning was the unemployment numbers. According to the federal government, the U.S. unemployment rate dropped in April to a four-year low of 7.5%, down from 7.6% in March. Employers have added an average of 208,000 jobs each month in the past 6 months. That's up from just 138,000 in the previous 6 months. This further points to the fact that the U.S. economy is improving, at least during the first part of this year. The big sell-off in the stock market was caused by rising bond yields. The situation that's developing is very interesting indeed. The stock market is up over 17% this year. Every year since 1950, the stock market goes through a minor correction where it dips at least 5%. This has not occurred yet this year. Many investors who were not getting enough interest yield from the bond market invested in high-yield stocks so that their investment could produce some interest rate in addition to growth. The bond market has been increasing yield since the beginning of the year, and yesterday the yield on the 10-year bond rose to the highest level of the year. The interest rates are beginning to increase, and stock investors are afraid that the stock market is going to correct. So you have a perfect storm on your hands. On one hand, you have rising interest rates that cause investors to sell high dividend stocks, and you have the fact that the stock market gained so much in the last several months, it's causing investors to liquidate to protect some of their profits. Both of these factors combined equal decline in U.S. stock market prices in the long term. Notice the chart of the 10-year T-bond futures prices. The lower the 10-year bond futures trade, the higher interest rates become. So if this chart continues moving down in the next few weeks, it will put a damper on the rally we saw in recent months in the U.S. market. That's the stock market. Further, if the economy keeps rebounding and there's ample evidence that it will continue moving upwards, the Feds may begin raising interest rates again even further, which will cause the 10-year bond futures to go down further and interest rates to increase. I will keep an eye out and will update you as things develop in the next several weeks. Meanwhile, keep your eye on the 10-year bond futures contract daily. Tomorrow we have the GDP numbers come out, 1 hour before the stock market opens. This will set the tone for the day tomorrow. I recommend watching the Nikkei close late in the evening tonight and watch the GDP numbers tomorrow morning. I don't recommend initiating any trades in the morning tomorrow. I believe it's going to be a very volatile morning trading session. Today we initiated an opening short position on FMX stock. The buy stop, which is the protective stop because it's a short, should be placed at around 109.15. The stock triggered the sell but did not have too much activity today. Most traders are waiting to see how the GDP shakes out tomorrow before initiating or liquidating any major positions. I suggest you do the same. Our existing two positions are doing fairly well for us. PFE Pfizer has moved down to another lower level. We are only about 30 cents away from reaching our first profit target level. I would place a buy limit order at around the $28 level and liquidate about 30% of my position. The next target level is slightly below the $27 level. I will update you if we liquidate partially tomorrow, and I will give you the exact target level for the final liquidation as well. MGA stock is still moving in our direction and seems to be closing near the upper range, which is good. This demonstrates good relative strength, and I will continue holding this position long. I don't anticipate huge profits on this position because I believe the stock market has limited momentum to the upside in light of the federal announcements and the bond market. That's it for today. I will update you either tonight or early tomorrow with any unforeseeable news or updates. Have a great evening, everyone.